Hey, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you are searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the webinar, and let's welcome Dimitri Pargamonic to the stage. We'll be talking about the option volume report. How you doing, D?
Good morning, Will. How are you?
Good. Let me bring up your screen. There you go.
Everyone. Yep. And I'm going to navigate to the report so we could quickly go over it and see what type of insights we could get. And I'm going to go under options, and we're going to click on this options volume report. I'm going to just click on this question mark to minimize that explanation. And in this report, what we have is a table with the stock symbols you could see on the left-hand side of all the securities that have listed options available to trade. And then we got some summary statistics, and this is a good starting point to kind of get a picture of what's going on. What are people trading? What are the most active options? The relative volume. And I think maybe what we'll do is go from left to right, talk about the different data elements here, so you guys could kind of understand what's going on, and using this as a starting point or a launch pad to research, where there's trading interest and anything that looks unusual. So from left to right, we have the stock symbol and the name of the stock, Tesla, the stock price and change on the day. Here we have a trade count, which is the number of trades in the options. So when we talk about a trade, it's a transaction, which could be different from the option volume, because one transaction could consist of one contract, or it could have 100 contracts or even 1,000 contracts. So a trade is a transaction. And then next to it, we have a breakdown of the total dollar value of those options. And we could toggle over here, it's set to the notional dollar volume. But if we toggle over here and click on this, this shows us a breakdown of the amount of contracts. So you can see here in Tesla, there are over 3 million contracts that trade, option contracts that traded on Friday, because this is Monday morning. We haven't opened yet. So this is as of the close. Or we could go and toggle back to the dollar value of those contracts. And the difference there is when we trade options, an option, some options could be a penny, 2 pennies, 3 pennies, and there are other options that could be $1, $5, $10. So not every transaction is the same dollar value. This takes the volume and converts it to the dollar value of those transactions. So if we click on here, we could see that in Tesla, there was $2.4 billion worth of stock that traded on Friday. We could also look at that on a relative basis. Tesla, you could see Tesla, SPY, QQQ, Apple, the top stocks tend to trade much more than other options. So even though there is a lot of trading activity, another question is, on a relative basis for this particular stock, is it unusual? Is there more trading interest than usual? Is there less? So to do that, we compare it to its average daily volume. So right next to it, you see in the last 90 days. So we go back 90 days in Tesla and all these other stocks. Look at the daily volume, in this case in dollar value, and we take the average to get an average daily. So you can see here, Friday, we compare now 2.4 billion versus average daily volume 2 billion. So it's kind of, close. And to make it easier to kind of make that comparison, we could take the ratio. We could take the days dollar volume divided by the average daily and get this ratio. So now we see all these ratios that we could sort or filter next to each other. So on a relative basis, it makes it much easier to compare. So for example, Tesla is trading at on a ratio of 1.2. That's because Friday's dollar value volume was greater than its average daily, but in SPY, it's less than. Okay, so now we could just kind of go down the line and see if anything sticks out. We could also sort like this, but I'm going to go back to the sort by notion. Okay. When we look at the dollar value, that's the dollar value of all the options. Another question that pops up is, well, what is the breakdown of that between calls and puts? Is it broken down 50-50, or is it weighted more towards the calls or weighted more towards the puts? So here is a breakdown of the dollar value in the calls and the dollar value in the puts. So in Tesla, it's just very easy to see that way more options in dollar terms traded in calls relative to the puts. $1.9 billion worth of calls traded versus $519 million worth of puts. While we're on this table, we're looking at it, we could get a little bit more of a breakdown of how did these options trade. So when we look at option trades, they could trade buying or selling a call or a put. It's just like a single leg option trade. But you could also enter in trades that are multi-leg, where you require an execution of two or more legs, that are contingent upon each other, like a call spread, let's say. And when you enter in a multi-leg trade, and it gets executed, that will get tagged as a multi-leg trade. Okay, so if you entered in a call spread where you need to get executed on the spread where both legs need to get executed simultaneously for a specific price, that will pop up as a multi-leg trade, butterfly, so forth. So to get the breakdown of those, we have over here single leg trades, multi-leg trades, and a contingent trade. And the contingent trade is usually where there's a stock component involved, where let's say a buy right. Buy right involves an option and a stock at the same time. So these are your breakdowns here, where you could kind of come in and get a quick sense of what's going on. Even the top, you could see top 10 stocks here. Some of them kind of maybe stick out because it doesn't look like they're OKLO would be something that usually pops up in there. But you could get a sense of what's going on here. The relative volume, the breakdown. You could even compare it to each other, where is the relative volume on these top 10, let's say, are they all unusual, or just some of them are unusual? Because if they're all high, it could indicate that just the trading volume on the day, is higher than usual just across the board, or if, something sticks out, that's something to go research further. If you want to narrow these down, you could also use, for example, some of the filters up top. So let's say you're looking at a relative volume, that's above 2. Click on that. Now we narrow down stocks with the relative volume on a day above 2. If we're looking for something where, maybe it's skewed towards the calls or puts, you have this put percentage. So this kind of just gives you the ability to narrow down, if you want to see a bigger percentage of the trade in the puts or in the calls. So if we wanted to see it in the puts, we could just say above 80% of the volume is in the puts. So then you could see here that the put volume is greater than the call, more than 80%. If we want to go the other way, you could say the put volume is below 80%. So that will flip it where you have more volume in the calls than the puts on a relative basis. Okay. If you're looking maybe for options that are displaying a large portion of the volume, let's say multi-leg trades, we're looking at multi-leg trades represent more than 70% of the volume. So here you've got JCI, Johnson Controls, Unity Software, where the volume, total volume in the options, 70% or more are multi-leg trades. If you're looking the other way, we could take that out and look at where most of the volume are in single leg trades. Let's say about 70%. So you can see here in Apple, we have more than 80% of the volume in calls, and more than 70% of the volume are in single leg trades. And this relative volume, I think it's based on the contracts. Okay. So this is a quick way to come to a larger option volume report and get some insights, what's going on, and then narrow down your candidates to do further research. So Will, I'm going to stop right there. That was a good introduction to this report.
Yeah, that was a great introduction, Dee. Thanks for bringing that. Just so everyone knows, tomorrow and Wednesday we are off for the holiday. We will be back live on Thursday. I will put out videos that we've pre-recorded for both those days. So it'll be a 9 a.m. start, so you can get on and chat. All the Chameleons can still have their chat time together. Great job, Dee. Thanks for bringing this to the Chameleon community, and we will see you on Thursday.
Yep. Thanks everyone for joining. Stay safe out there and have a great trading day.
Have a great day, Dee. Thanks. All right, everyone. Thanks for joining us for another Market Chameleon webinar series. Remember, we have a show today at 4:30 with Ryan Mastro, and he will be coming on and showing some different trade ideas he's seen during the day, and we'll talk about them and go over things he saw last week. Also, if you're joining for the first time, remember to try the free trial. Click here and it will take you to the free trial setup. It will be very helpful to the Chameleon community and us if you do that. Everyone else have a great trading day and a great next 2 days off for the holiday. And you will see those webinars that we post in an email each morning. So have a great day, everyone. And thanks for joining. Bye.